Okay, so welcome to part two of the IMR for Friday, 9th December. Um, so we're actually doing this on Sunday, on the 11th of December. Tomorrow morning, another about 12, 13 hours, the market will be open, 12 hours. And in part one, we basically, as usual, looked at the global markets and then the local indices. And what we saw there was that three sectors in particular were probably good buying opportunities. The first on the list is Realty. Second and third sort of put together was metals and IT. So we look at those first, and then I won't be surprised if we find enough opportunities there itself. And if we have time, then we look at FMCG for basically maybe on the short side. So essentially, if I just go to the sector indices and put up the Realty first, the first and most important thing to understand as far as the Realty index is concerned, and you're looking here at the weekly chart, is the fact that ever since, so first of all, one of the problems with the Realty index, we have the CNX Realty also. The CNX Realty Index basically goes back only till 2011 or 2010 end, but the BSE Realty Index goes all the way back till a little bit late 2007. So essentially 2008 Jan, as I've marked on the screen on the left, is probably the highest point Realty was. What I'm saying probably is that since we don't have more historical data, there is no definitive way of actually being sure without data. But given that that's where the market topped out and then market came down, it's probably fairly reasonable to say that that's where the highest point is. And as you can see, at that time the Realty Index was at around 13,000, and as of date, today we are at around 1,200, or say 1,300. So 10% of its peak. Please note that the y-axis is a semi-log axis. It's not a linear axis. So the market's still down 90% from its peak levels, at least the Realty index-wise, and that says a lot about the state of affairs there. The second thing about the Realty index is that since 2013, there, it formed a bottom there, and the same similar bottom was formed in 2014. We had a big up move in the first quarter, and then it came back down in 2015. In 2016, it made a life low, right? And then more or less we've come to those zones now in 2016, right? So from the last 4 years, in a sense, it has really, it has attempted once to break out there quite sort of meaningfully, but not been able to go above an important resistance. And let me just point that out. So you have that as a sort of important double top there, and I'm going to just extend it into the future for future reference, because this is a level that is definitely going to play an important role at some time in the future. Right? So it's come down, and we have a sort of, you could say, 1, 2, 3, and 4, a quadruple bottom over almost 3.5, 4 years. And that's what makes it significant, with an attempt to break down here, which actually did not take the market down much. So, and please note, we're looking at the weekly chart. Now, if I turn over to the daily chart, there is some more evidence to note. So the daily chart will obviously look more cluttered, but why I turned over there is at this point, or rather in the last 4 years, if you just look at this red line, which I've, the dotted red line, sorry about that vertical line, the dotted red line right from the left going all the way, that's the 200-day exponential moving average. And the market's, actually been able to go above that quite a few times, and then, of course, not been very successful in staying above it. And of late, it had, suddenly then broken down, and the big breakdown happened here, and that was, of course, because of demonetization. Big, huge gap in the chart, right, which should be marked. So this is the realty index. We're looking at it more in detail, that's all. And okay, let me just make it clearer with maybe this. Yeah, this will give you a clearer picture. No clutter, no indicators. And what we basically have is this gap from the low of that to the high of this, okay, which is actually a much bigger gap because that was the original point, and then it tried to recover, and somehow just did not succeed. And after making this big, fall here on 21st of November, we basically seem to be in some sort of a recovery mode as far as realty is concerned. Going back to the other sheet, given that we have all these moving averages there, etc., and it's been able to in the past go above the 200-day moving average and not break down below that 4-year level in spite of demonetization. As a matter of fact, that level being reinforced with this line, right? So let me just make that in color. All right. So technically, we are where we were in 2013, a good 3-4 years back, and it could definitely be that now recovery, and perhaps the worst is perhaps over. The demonetization thing and this whole industry is going to have to mature and get away from the cash heavy norm that it has had, and that will just take its own time. But looks like things have adjusted, and one of the key things, not key things, but one more important thing is that on Friday the market actually, the realty index closed up quite nicely in terms of being a Marubozu green candle, showing some strength in spite of overall weakness in the market. There's also this small head and shoulder bottom, okay, left shoulder, head, right shoulder, clearly it broke out, and just extending this. It's quite tempting to say that that breakout got tested as a support, and then has sort of held, and then now probably going up. Indicators are all positive and also aligned on the upside. The big significant level, if any, are these moving averages right on top, and the level it had before the demonetization, which was at 1,450 or thereabouts. So right now around 1,400 to 1,450 is where a lot of resistance, a lot of drama is likely to happen as far as the realty index is concerned. So overall, if you going back to just to reiterate the big picture, multi-year bottoms forming, no new lows being formed in spite of the big thing about demonetization. The demonetization itself seems to have, though it's not recovered fully to those pre-demonetization levels, it looks like to me that it is probably on its way, right? So all said and done, from a very technical perspective, this looks like it has formed a really, really good base. Looking at it from monthly chart basis. Rarely do that, but this is a monthly chart, and you can actually now see sorry about that it's done a pretty good job of forming a base over many months. So that is where it is, right? So this is as good as it really gets. Not that it cannot break down further from 1300 or 1000 levels, but it's after forming a base like this, it's unlikely that a chart like this will break down further. It's just unlikely. Not that it can't happen, it's just unlikely that it will happen. And also given, I think, more or less a positive turnaround that will probably happen in the real estate stuff over the longer period of time, of course. This fundamentally also seems to be a good or a decent idea. Remember that, of course, all the companies you're talking about are listed companies and not the unorganized players. So the listed ones, not that there's no cash transaction there, but still, I mean, to a large extent, have had to move away because of this accounting issues, and because they're listed, a lot more scrutiny and a lot more auditing that happens. So it's really tough for them to, do as much in cash as perhaps the unorganized or the unlisted companies do. So with that, let's just jump in and look at the stocks which are there in the FNO space, the realty space, starting of course with the big daddy DLF. Okay. So you should be seeing the monthly chart of DLF on your screen, and essentially DLF is the big daddy, the big heavyweight in the BSC Realty Index and also the CNX Realty Index. So the DLF chart and the index chart more or less look the same. And in this, you can put a downtrend line, and if I put the most extreme downtrend line I can right now, then clearly that downtrend has not been broken, right? But is perhaps could be on the verge of being broken if the DLF can go above 175. What DLF seems to have done, and this is the monthly chart, is formed a pretty good base around 110, 115, and if you see these candles here, all spinning tops or small shadows, and the lowest was of course um, 72 rupees, and right now we are at 114, and then it went to about 120 and 67, doubled in price, and then has come down again last month. So this is the November red candle. In the future, it could really pan out that we could be having some sort of let me put that line first. That I think would be the level to sort of watch out for, and that's at 171. So 171 breaks, I would say, then in a sense, a sort of head and shoulder which has happened over 3 months, two and a half, 3 years, is what could break out. So something like a left shoulder here, big head over almost 1.5, 2 years, right shoulder being formed, and then there's a horizontal neckline, and of course the downtrend line. So two important things that would break out. The 2010 to 2016 is a 6-year downtrend line. So of course, a long way from breaking out. Going up there itself will give you a 50% return almost. But that's what could be cooking. If you look at the stuff from the indicators side and all, you can a little tough to read this in terms of especially monthly time frame, but especially if you look at the MACD, still below zero after many years, but clearly trending up from -40, -50 to -5, -8 right now. And another 2, 3 months or 4 months, or who knows, sometime middle of next year, this could firmly be at zero. And for technical guys, from a very long-term perspective, that will be a big achievement for the MACD indicator. On the shorter time frame of weekly charts, things are you know looking also a bit what should I say, signs of strength. And why I say that is this was, of course, after demonetization last month, and after that we've had this very small weekly candles with shadows predominantly on the lower side, suggesting that the bulls are waiting to buy at lower levels, 100, 105, etc. And so we've got 1 month of 4 weeks, 4 candles of consolidation going on. Could fall down, all right? This could end up looking like a flag, downtrend flag, and it falls another what 20, 30 rupees, which will take it down to about 90 bucks, close to not very close, but close to its life lows. But I think that's not my uh, primary view right now. If we look at the daily chart, um, everything on the indicators showing strength, and what's also important is we just focus on the price side. We've got 4 weeks of pretty small price action, 100 to 118, 118, and coming back to 110, 118, 110, 118. And there is this resistance level that clearly DLF needs to break out of for it to actually go up. So if you are a sort of conservative trader, investor, you would want to put an alert at around 119, 118.50, and once it breaks out of that, then perhaps jump into the market. On the other hand, if it does come down to 110, maybe even 105, and it comes down in a very gradual manner, or it has one more hammer-like pattern like this, then that might also be good enough to get in. It's only if DLF breaks below 100, I think you will have any significant reason to worry about. Till then, it looks like to me, creating a nice base for it to move up. Once it clears 118, 120, then it could rapidly move all the way to 140, which might happen, I don't know, next quarter or next 2, 3 quarters, probably perhaps maybe even late next year. Don't really know. But just to give some perspective from the past, when things turn around, notice that at this price, Feb 2016, the stock was 88, 90 rupees, and it went from 90 to about 110 in about just 3, 4 trading days. And that's a big 20-30% move. And after that went all the way to 170 in the next 6, 7 months. And that's the nature of the market sometimes. And for all you know, some big up move happens, and a lot of buying comes into the market. In terms of volumes, after this big high volume fall, really nothing much to say. Can't really say high volume buying has been happening. So looking at the volume based indicators, where is that? Right. Okay. PVT and OBV, on balance volume. You can see that maybe on the OBV side, there's some amount of strength which is there. PVT not really showing any strength as far as the buying opportunity or the buying strength is concerned. Right? So at least one out of two things okay, the other one is flat in terms of a bullish view. So I think DLF therefore becomes a very key stock in the realty space to track, and either it is for sort of aggressive investor to decide whether to get in now and even all the way down to 110, 105 keep adding, or you're a conservative investor trader, get in only if it breaks 118.50, 119 on good volumes. If it does that, like I said, 140 could be a clear possibility. You're talking about a 20-25% upside from these levels. Right? So that's on DLF, and of course that's also an FNO stock. So you can look at various derivative-based positions, maybe buy a call, covered calls, reduce the cost. You could do, of course, in futures and protect those futures with a hedge on buying a put. But these are all for people who are positional and are willing to hold their positions for perhaps many months. And given that we are already on the 11th of December, almost half the month over, and the usual end of the year Christmas dull period will come, maybe look at the Jan contracts rather than the December contracts for taking any FNO positions. If you're a spot, then of course all this doesn't really matter, right? So that's as far as DLF is concerned. So, moving from there and looking at the other realty stocks, there's of course Unitech, which I don't think is an FNO anymore, and basically doing the same thing as we did for DLF in terms of a detailed analysis. So Unitech has been a crazy thing, right? So from a multi-year perspective, it was after taking care of all corporate actions, a 25 paisa stock, which went to 500 rupees and has now come to 4 rupees 80 paisa. So what a change in fortunes! It's just amazing. 99% loss of price. Long-term downtrend, clearly very much there, and in tech there is no two ways about it. You want to put any downtrend line, it's not going away, right? So the thing about Unitech is that it's come to really, the long-term downtrend is still there. Having said that, if there is any hope on it, then it's the fact that it's sort of in a very generic way, a triple bottom that has been formed at around 3 rupees 80 paisa, 3 rupees 90 paisa. So almost obviously a penny stock could become a junk stock if it is not already. And in the long term, this is going to take a lot of patience, courage, etc., to make money on this. So the problem right now is that it is such a strong downtrend that it's very difficult to see a reason why it could go up immediately in the near term, unlike for DLF. So DLF has a 4-year time making a bottom. This one has spent at best maybe 8 or 9 months, and we don't even know whether that is a good bottom or not. Putting all the indicators and other volume stuff on Unitech, if there is hope now, I think then you can clearly see one of the things is about the volumes. The fall that has happened, say, in this is weekly chart in the middle of this year, and then of course in October and December, it was on significantly lesser volume than previous selling volumes, as you can see in 2015 and 2016. So quite possible that going down on very, very low volumes compared to before, the selling pressure is dramatically less. Can never say it's gone, and maybe this could be forming another base. Okay. Looking at it in a even shorter term in terms of daily charts, then you can very clearly see that there was this huge move in mid-June, right, when massive buying happened on the stock, and the stock went from 4 rupees to 8 rupees. It basically doubled in about 2 months, 1.5, 2 months. After that, it's basically come back to not exactly there, but quite close to where it took off from in mid June at around 4 rupees. It came back to a low of around 450, and now it is at 480. However, what is very, very obvious in the fall since August are the dramatically less volumes compared to the June, July buying. And if I look at the volume analysis and the volume indicators, then you can see this massive jump in the indicators mid-June, July, and they haven't really, you know, uh, crashed or anything like that in the sense the way the price has, and especially the PVT remains quite strong and flat, right? And even a little bit of buying just maybe 1 or 2 days could push the PVT back to its life high and take it higher. Okay? Not that too much should be read into non-price indicators, but still the bullish sentiment I think is quite there. Other thing to note on the technical chart for Unitech is daily chart is that in the month since June, July, where it did break the 200-day moving average and then broke down below that, it hasn't really been able to go above the 200-day moving average and stay above it, right? So that's one very important resistance there as far as Unitech is concerned. 6 rupees, significant resistance, 5 480, 490 is where it is. 5 to 6 itself is a 20% move, which could happen. And then once it clears 6, then 8, 850 is quite possible. So you're talking about almost 80-90% move that could be happening on Unitech, right? But so one thing is that I don't think it's an FNO stock anymore. If you just confirm that, and the only way to therefore get into this would be the spot market, right? So it was highly respected company. Well, not such a great story today. Not to say again that it cannot go down, but a base formation is definitely happening on Unitech. Moving on to other stocks, not really Realty per se, but they are included in the index, BSE Realty Index and CNX uh, index, Realty Index. Not very high weightage because mostly these are more into infrastructure rather than realty as in construction, but nevertheless, for what it's worth, doing the same analysis in terms of linking it as far back as possible. What is very, very obvious on this monthly chart for GMR Infra is you can see how 10 rupees has become a pretty decent support. So low 9 rupees 80 paisa, low 9 rupees 80 paisa, low 9 rupees 75 paisa, and then this low is 10 rupees 20 paisa. So 9 rupees 80 paisa I think should be an alert level for GMR Infra. No question of if this stock breaks 980, it could actually go much, much lower. But if it doesn't do that, then maybe the life low has been made and it will not break that. But such things only time can say. Not such a happy picture in terms of volume. You can see that volume did rise in 2014. There was some buying and then there was selling also on uh, volumes, but you could say lower volumes, but still I think high volume selling at that time. Only thing now, they're clearly forming a base. Whether this is the base, that only time will tell. But it's close to where the bottom is to start considering whether you want to get into this stock. Coming to weekly chart on GMR, then just looking at let's say 2016, then you can see that in the first part of 2016, there was high volume selling. There was an attempt to go up, but that did not happen on good volumes. Again, selling happened on larger volumes. Then in the middle of the year 2016, there was high volume buying, and then the correction now from about 14 rupees 50 paisa to in August September to this move down, that has not happened on as high volumes as we've had before. So possible that things are turning around for GMR infra. When we look at it, one more thing from a weekly chart basis, you can see that the weekly long-term moving averages are still trending down, but when you look at the daily moving averages, then all those, the dotted red line, the dotted sort of cyan blue line, and the dotted white line, in a sense, since 2016 have been in a range bound sideways market. One more thing for GMR infra, credit where it's due. Unlike we did not see this in DLF, for example. This was the demonetization day. You can see how big the tail was. Stock went from 1180 to 1020 and recovered. And all the other stocks we saw so far have fallen below the demonetization levels. This one has not. So in terms of relative strength, this is definitely showing a pretty decent or a good amount of outperformance and strength on the upside. So there's a good strong technical reason to be perhaps in this rather than in some of the other realty stocks. So 1180 is a stop loss of around 1130 if you're a short-term person, but if you can hold this for the longer term, your stop loss would be below 1010 or 10 below 10, say 9 rupees 80 paisa, which is of course I understand a 20 paisa drop from where it is right now. But remember, it's almost a penny stock, and if some activity happens, then suddenly the stock will go from about 12 rupees, it will go to 13, maybe 14, and even 15. That gives you a 30-40% upside if and when that happens. I would think that somewhere in the next, anytime from now into the next 6 months, even that I think is too long. And there will be an attempt on the stock and to take it to 14, maybe 15, and even 1560. Then the question is whether it will break 1550 and then open up further headroom for 18 or even 20 rupees, which could then mean you've doubled your money. And even if this takes 1.5, 2 years, then this would definitely be a good entry point. You can also see on this daily chart that these are the lows we were talking about. This happened in 2015, and in a sense we've got a 2-year bottom information, or if we take this bottom that was in 2013, so we've got a 3-4 year thing bottom formation happening, but more than that I think to be accurate, only from mid 15. So 1 year, 1.5 years bottom formation has been going on, and sometimes that's good enough. So definitely not as long as DLF, but also something which is pretty strong, I would say. So good upside that's possible on GMR infra. In terms of indicators, I'm just trying to see if there's anything additional. Not really. All right, okay. And then coming to JP Associates. So again, once upon a time, a darling of the market, a stock that has gone to 300 rupees, and that is now trading at 7 rupees 90 paisa, 8 rupees. I don't know if you are seeing what I am seeing, but there is something which has caught my attention on this stock. So this is the monthly chart, and what I want to focus on is this part. So this fall, as you can see, the early part of 2014 happened on pretty decent but not very high selling pressure. You can see the red candles are there, but they sort of diminished, but then they came back up in these two candles. Then you had some attempt at buying, and that was on a pretty good volume. And then you had a fall again, and then this fall all the way till here happened on relatively less volumes compared to the fall that is here. Right? And then we had this up move, and this up move happened on fantastic volumes, massive volumes which we've not seen for its entire life. And then the fall again in the last 4 or 5 months has happened on drastically lower volumes. This is the typical textbook explanation for how we like to see a head and shoulder bottom. Okay? And you can see more evidence of that in this weekly chart. More on, you just look at this, and this is looking like a multi-year head and shoulder bottom. So this is not the first one you're seeing. Big left shoulder, massive head of almost 6-8 months. Right shoulder is in formation, and I dare say that maybe the right shoulder bottom has been put in place, and then the up move on the right shoulder began in the last 2 weeks. So even from here, 8 rupees to go to the neckline of 13 rupees, that is almost a 40-50% return. In terms of measuring implications, if assuming this is a head and shoulder bottom, then 550 to 13 rupees, it's almost 8-9 rupees from here. So that takes it to about 20-21 rupees, right? We're talking about 8 to 21, almost 250% profit that could happen on JP Associates. So looking pretty good, I would say. This is the daily chart, and nothing additional to be said on the daily chart. There was a time when the stock was well above its long-term moving averages of 50, 100, 200 for almost 6-7 months, and then just cracked more or less, I guess, because of that worry about Trump, number one, and then there was worry about then the demonetization came. In this one, unlike GMR, you can see that after demonetization, this went actually much lower down, and then has put a hammer there, and has been a confirmation, and looks like an uptrend has potentially started. Though the candles in the last 4 or 5 weeks are pretty weak, I would say. Right. So this is how this is looking. Not as good as GMR, but in terms of potential upside, I think the best we've found so far at about almost 200-250%. 1, 2, 3 years even, that will actually be absolutely fine. Okay. Require a lot of patience and courage, but yes, it could handsomely pay off. Okay, next. Coming to IBR real estate. Okay. So IBR real estate, looking at the long term, let's look at monthly. So this stock at its peak was around 750 rupees, and right now trading at around 84 rupees. Okay. If we again, this is the full data, now looking at it on a weekly basis, you can see how it's at around 39-40 rupees, it has found a nice base for 5 years. We're talking about late 2011 till now. It has done that once, twice, 3 times, 4 times, and if you include this one, then almost 4.5, 5 times, right? So somewhere here at around 40 is excellent support, but 50 is also a good place to get in, and it has not been able to cross 80 to 90 zone for almost 5 to 6 years. Looking at volume, again, you can see the typical thing of massive volumes in the middle of 2016, right? Again, there were massive volumes here in the middle of 2015, And this is definitely not retail money. This is some big either promoter or FIIs or somebody in the know who's consistently buying this stock at those 45, 50 levels, and not small quantities, massive quantities. However, 2016 was not the second half of 2016, not a very good year. Right, as you can see, it went down weekly, not great volumes, and there was again some buying there, and then the fall happened, and the volume did pick up a bit. All said and done, however, definitely there is a lot more committed buying than committed selling. And on the weekly chart, this could have been the hammer that was needed, and we have some sort of a, I would say, tentative confirmation. Looking at daily charts, up moves there at good volume, and then we had further falls, but on very low volume. It moves there again on okay volume, and then a sideways consolidation phase that is going on. And I think more than anything, this stock wants to really go up. So 77, 78, 80 is where the big significant resistance is. Around 70, 71 would be a good buy. 78 will be the wait and watch zone. If we can break that, then 85 to 100 could easily happen. So that's what I would think on IB real right now. Yeah, of course, one thing I might have missed it on the other charts. You can go and have a look again. You have all these gaps, unfilled gaps, which are there, and the markets tend, when they close that, tend to just shoot through it, and you could see a big move, and it's actually there right now. If you take a closer look on maybe real estate, then the highest point was this candle, right? So I'm just going to put a horizontal line from there, and you can see that we are basically just there. Thursday we just went there and came back down, and then Friday was a spinning top, and you can see that on Thursday the volumes are really good. I would be surprised if this moves next week sometime, and or rather starting tomorrow, and this breaks 72.50, 73, and could quickly be at 78 or 84 also in a month or two or three, and that would be almost more than almost a 14-15% return, right? So that's very good. The big sticking point is, of course, the long-term moving averages, but that's where the gaps also are, the gap to be filled. So this is definitely going to be an interesting thing to watch in the coming days and weeks. I don't think it'll be months, it'll just be days, probably, if not maximum weeks at this point, right? Okay, so I think of all the stuff we saw, in terms of an immediate action, I think this is what catches my attention at least. Okay, so that was IB real estate. Coming to next, IRB. Okay, this stock, what's sort of almost unique about it in terms of the technical picture is that this stock did not fall to 90% or 95% of its peak. It's not lost 80, 90, 80, 90, 95% of its peak value. And one of the reasons I've always wondered is that the stock got listed after the crash, right? Or this was okay, Feb 29th, right? And actually, Feb 29th, 2008 was just as the crash was beginning. So peak valuations almost maybe at that time. But what's definitely unique about this stock compared to all others is that it made a new life high after listing in 2008, and went close to that in 2014-15. Big long-term consolidation that happened there. So that's a big 280 to 320 important resistance zone, life high zone. If it was not for, I think, this demonetization um, event, we would have seen this stock, and you're looking at it on a weekly chart. You can see the massive volume in 2014 that took it from 71 to 213, and then this 2.5, 3 year consolidation that happened on very, very, very low volumes. And then this fall that happened in October, or rather November, if I think would not have happened if demonetization had not happened. Right? That's at least my view. Okay, so it tried to break down, but again, when I put this note here about an impending breakdown a few months back when we looked at this in the IMR, and it actually didn't really do that. It tried to. Uh, it made a temporary intraday low right there. Okay, and recovered and was bought again aggressively with massive volumes. Okay. And then you can very clearly see that the fall after that was on very, very low volumes. The volumes got exacerbated after the demonetization, and then it's done this sideways 1 month consolidation, and I would suspect is perhaps readying itself to move up is the way I would look at it. A lot of doubt in this stock, a lot of spinning tops, a lot of dojis, as you can see, for 4 to 5 weeks. And if there is any indication of what from the most recent, it's this green candle here. It's the biggest one we have seen. And the red candle, 3 red candles below that, before that rather, were relatively speaking of small proportion. And this one is a good proportion. If you look at the volumes on that, the volumes are also, double, triple of what it was for the last 4 days before that. And this is another one, I think, like IRB real estate, which is sitting on the verge of perhaps making a move. No gap in this stock, right? There's no gap in this stock, in this chart rather. So we'll just have to see how it goes, right? So that's the resistance level at around 194, 195. If it clears that, then 210 and then 222 are distinct possibilities. Okay. And once that move happens, it gets underway, it could reach those targets in just maybe a week or 2. That's it. Okay. So that's as far as IRB is concerned. Coming to NCC, Nagarjuna Construction Company. This is another one you can see that has held. I mean, yeah, it's got a what shall I say? It's respectable, if I can use that word and if it makes sense. The stock in 2001 was 85 paisa stock, went to 230, and it is now at 80. So, about a 60-70% fall. Nothing like what it was, a 90% fall earlier at 10 rupees, 95% fall. And then from 10 rupees, it has recovered back to 80 rupees since 2013. And if you can visualize it, I'm sure actually you can just, you can see one massive consolidation which has been happening for the last 8 to 9 or 10 years. So you can think of this as a inverted head and shoulder bottom. Sorry, inverted head and shoulder, not a bottom. Inverted head and shoulder as in this is your left shoulder, massive head, and a right shoulder that is still in progress. If you can trust the textbooks now, Maggie and Do theory and all, 10 rupees to 100 rupees, 110, almost 100 rupees. If it breaks that 110, then very likely it's going to go back to its life high in a pretty quick fashion, right? So that's something to really keep in mind about. Uh, yeah, so this one definitely looking much better, much better. All right, much better simply because almost all the others except IRB and IB real estate, they are close to their life lows or their multi-year bottoms. NCC, IRB, etc. are almost close to their life highs, and that's a whole different setup. So within the realty space, you have this very distinct group of two, three stocks where they are close to their life highs. All the other ones are virtually close to their life lows. Lastly, HDIL. So if you look at HDIL from again a long-term perspective, multi-year chart. Sorry about how this empty space at the bottom appears. It's a bug in the charting software in the way the Bollinger Bands get plotted. Let me just go to this. All right. So HDIL, you can see again very clear, bottoming out formation that is happening on HDIL with that being the life low, right? And then if we look at some resistance zones, and that's the, I think, the level to watch out for. And you can see the sideways rectangular consolidation that's been going on since 2012. So 1, 2, 3, 4, fifth year. And well, what's clearly unusual is the volume picture. The volume tends to very significantly become less during those 4 years, or rather during a rectangle pattern, but clearly that's not the case. And looking at the PVT OBV, what you can see is clearly there's been overall net strong buying in the last 4 years. The price has not really moved up, but you can see that the PVT and the OBV have moved up, and added to that have stayed up. That's the most important thing. All right. So this is a simple chart. You need to be patient for it to break out of from 130. That's a doubling in price from where it is right now. So the 62 to 130 will double the price, and then after that, you never know, it could easily go to 200 or 300 after that. Okay. For long-term investors, for patient guys, this is the sort of stocks or setups that you want to look at, right? So actually, all of them in reality, except again IRB and I think not JP, IRB real estate and IRB. Okay, so sorry, IB real estate and IRB are all perhaps, or those three are perhaps trading, opportunities or trading calls, but all the other ones that we've discussed are more like long-term investment opportunities for people who have more than I would say 1 year horizon. I would say you'll see action probably in less than 6 months, but if you've got a 1 year, 2 year type horizon, then these could all be stocks that could give you more than 50, maybe on 200% in a year or two, right? And that's why in the first IMR I said, or the part one of the IMR I said, this could be a multi-year buying opportunity. Right. So that's of course not the comprehensive set of realty stocks. There are more. Let's see if I have anything. Oh yeah. So let's do that and maybe close the session just with um, the realty guys, because there is so much opportunity there. So looking at Prestige now, Bangalore-based company. Really nothing much to say. This is like a consolidation that's been happening on the stock, a multi-year thing. Come to about 130 and good support. good support for sure, and there was on a daily chart a bullish divergence on the RSI and the MACD. So that is something to keep a note of. And this is probably heading towards 160 and then 170, 175. Current price is 150. So in terms of an upside, really nothing great compared to what we discussed the other stocks earlier. The real book move will probably happen only if it can break above 220. So I don't know. I mean, just from a pure returns perspective, maybe I'd give this a pass. It's still been consolidating since it got listed for 4 or 5 years. And you can always look at this after maybe some of the other stocks. If you put your money into that, those have done well. And you take some money out of that and put it into Prestige. And I would say the same thing for Shobha. Just looking at it, looks like a copycat of Prestige, both a Bangalore-based basically. And the reason I'm saying that is just look at it. I mean, without any, or if I go here to the plain chart and make it monthly, right? You can see that from 1100 it came to crashed, came to 100. So there you have the 90-95% fall. And then over the last 4 or 5 years, just been stuck between sort of 200 and 500. So in a sense, like what did we see before? HDIL and other of those consolidation stocks, right? So there is nothing much more to add. I'm just saying that because I'm trying to figure out if there's anything compelling about these stocks compared to anything that we've discussed so far. So 4 or 5 year consolidations look like anything else. So there's really nothing unique about them in a sense. Oh, okay. So one more that is close to its life high. Okay, Phoenix. And right, so that from July 2010 when it got listed, you can see that it's actually done quite well and is close to its not at but sufficiently close to its life highs, I would say, right? Right. Looks like I've not really looked at this chart. So that's one level you want to watch out for. Life highs somewhere like that. And right now, this is where the support was, where it has gone up from around 280 levels. So from 280, again, that was again demonetization day. It's actually done a pretty impressive recovery from about 280, 290 and to 400, cooled off, and then a massive move on Friday. Looking at volumes, okay, looks like some big massive volumes have happened on this quite a few times, and that's why the volume picture here is getting very cluttered. But all said and done, looking at the way this has moved, you can see this massive green candle, green candle, green candle, and then green candle. And the red ones are much, much, much smaller than the greens, right? Around 410, 420, it should break out, I think. And this could be another trading opportunity, okay, for the pick amongst us. And if that happens, after it breaks above that 420 level, which is again rectangle consolidation between 290 and 420, so almost 130 rupees. Then 400. If you take the measuring implication of that rectangle and add it to the breakout, then the life high is something that becomes possible, right? So yes, I think you could look at Phoenix Limited rather than look at those bottom guys to put some money in. I somehow feel that the what's making this a little difficult to put a lot more conviction on is that the erratic volume picture, which is there. Okay, it's really not. There's a lot of coming and going participation in Phoenix Mills. You're not really seeing consistent volumes. So event risks that way could be pretty high. Liquidity could be an issue, but if a retail guy, I don't think all these things really matter. And one could look at buying some amount of Phoenix Limited to your spot portfolio. Okay. Oberoi. So Oberoi, again, one more stock which has been consolidating for 5 years. Okay. Really tough to say, but perhaps it is trying to, set itself up for a new life high in the coming months. And once it breaks to 360, then 500 could be a distinct possibility, I think. Right. So Oberoi, another. So what you can see overall definitely is that all stocks in the realty space are in consolidation phase. There's a good half of them at bottom consolidation, another good half of them after having risen somewhere in the last 2, 3, 4 years, have been consolidating for the last 2, 3 years, and then are setting themselves up for a next up move. All right. Last one, Delta Corp. Right. So I'm not sure this should be in the realty index, but if I remember correctly, we picked this all up from the exchange website itself. And at one time, this stock was all associated with more gambling and casinos in Goa than as a real estate developer. I don't know how much of that has changed. Okay. So some things are outstandingly clear in this weekly chart. First of all, the massive volumes happened sometime in July, August of this year, and it was bought madly, and it went from 100 and became 200 in about 4 or 5 months, and then from there it came crashing down to 114, and again that was of course because of our demonetization. So this stock was being aggressively bought since August. There was some lower of volumes and expectations as it gained 50-70% in price. And then, this is interesting. What day was this? Yeah, 9, right? So massive gap down. Right, so that's this big gap. That gap has not been closed. Right, so that gap has not been closed. And this is now doing something like IB real estate and IRB, where after coming down, it has not really recovered, and it is struggling with that 200-day moving average basically, and whether it will break that 117, 118, 120 zone, and if it does that, then 130, 140 could become the prices that you see very, very soon. Right, and sort of ascending triangle, as you can see. Right, volumes are less, and clearly the volumes are on the buyer side. So it could break 120, and then it breaks 120, it could go to 130 140. Right, so that's for Delta Corp. The plus for Delta Corp is if it breaks 140, then that's not, of course, the life high, but then 195, all that would become distinct possibilities. All right. So the demonetization thing looks like is a boon for people who missed the move on Delta Corp from August. There was, of course, one massive bearish divergence on this, and then the demonetization was just the excuse, perfect excuse it needed just to crack. So it actually has started correcting before that itself, of course. From 190, it had come down to 160, and after that, it just kept falling to 100, and quite possible that it is now, going and trying to make its way back up. Fundamentally, the demonetization change, whatever the fundamental view was in August, September this year for Delta Corp, I don't know. That's all the realm of fundamentals and awareness of the businesses and the management and the projects that they're up to. But that's not something I know, and it's not the scope of this session either, right? Okay, so which brings us to the end of Realty. So that took a lot more time than I anticipated doing only Realty. So I'm going to end this session here because again, I think like last 2-3 weeks, we've again found tremendous amount of opportunities, and I'm sure we don't have that sort of tremendous amounts of capital to go after all of them. What is definitely common to the Realty space across the board is that there is not a single shot. All of them are in one way or the other good buying opportunities. Some are immediate buying opportunities, others will require patience and just holding power. There are some which could give you 10 to 20, 30% maybe in a month or two, and the others which could give you even up to 200% in a, I don't know, these are things, time is tough to quantify, but in a year or two. Whichever way you look at it, those are really great opportunities. And also the fact that maybe, again, make notes and didn't put down numbers, but half the stocks are at their bottoms, and those are the ones which could give you the 100 plus returns. The other half which are consolidating towards their highs and the lifetime levels highs, and those could give you about 20, 30, 50%. So are you the sort of person who likes to buy strength? Then you want to look at stocks which are close to their highs. If you're the person who likes to buy bottoms, then you've got plenty of choice there too. Right? So with that, coming to the close of this session, I hope it was useful. We looked at most of the stocks from a long-term, multi-month, multi-year perspective, by as many of them as possible from the day of listing, and we saw them from monthly candles to weekly candles to daily candles. So hopefully that gave you a sense of the big picture to a small picture approach to analyzing stocks and then picking opportunities. Since there are so many, the thing to do will be sort of make a list. So we've got how many? 1, 2, 3, 4, 5, 7, 8, 9, 10, and plus all the other ones like GMR and IRB, about 15, maybe 20 stocks, and you could just make a table and categorize them into where the current prices are, what the targets could be, and how much returns that could one expect. You could put that in terms of course, percentage, and get a sense of time. Like I said, some are short-term trades, some are long-term positions, and look at how these suit your needs and requirements. Either you're looking at immediate money or long-term capital appreciation. So doing that categorization should give you some answers as to what suits you. Then further going into detail, you could look at what sort of losses could also happen, and calculate the risk-reward ratio, and then we take a more a slightly more informed decision. Of course, you could choose to diversify and pick maybe some from the ones top consolidations versus some of the bottom consolidations. You could diversify in terms of some for trading, some for investing. So plenty of choice, and of course, there's enough number of them on the FNO side. So you could do something on the leverage side or just on the spot side. All said and done, all are buys in one form or the other. And I think plenty of opportunity for every type of investor and trader just in real estate in the coming days and weeks. Right. So, as from a practical standpoint, it'd be good for you to think about how you're going to use all of this for your own trading, investing, and what would suit you based on your personal uh, circumstances and requirements. Right. So, a very practical opportunity that way to reflect on how one would use all these opportunities and which are the ones which are right for you, which is a personal decision, of course. Right. So great. So that brings us to the end of this session. I don't think we've ever done one single sector in such detail for quite a long time. Whenever I do something like this and we find so much, I'm always thinking maybe we should do more of that sector, in-depth sector review, and not a little bit of this and that. And yeah, one more thought, would love to have your feedback and your thoughts. So do get back with your inputs and we'll take it from there. So thank you. Have a great week ahead. Hopefully a decently profitable week, and you have enough opportunities on the real estate side to do something about it. I mean, do something as in make some real investments or trades and hopefully make money by the coming Friday. Right? Okay, so thank you and good night.